What is going on, guys? What is going on? Good morning to everybody. What is going on, guys? Let's see who is in the chat. Biggest Dickus. What's going on, man? Doc, what's going on? Razvan, Forpello, Holy Guacamole by the dip. Yeah, we're going to go over, obviously, we're going to go over the dip buying conversation. Aditya, what is going on? Anki, let's see, who else do we have? Suresh, what's going on? Space Monkey Mafia, love the name. That's probably some NFT shit though, but love the name. Who else we got? Investing Sensei, what's going on? Prachi, Joshua, Deshaun, Duck Fan, what's going on? Tanya, and Richard McIntosh. Hey, what's going on? All right, so a lot of things to go over this morning. I wanted to do this this live. Obviously, during times of market volatility, everybody's panicking. You have a lot of newcomers to the market, and I think it's really important to be able to communicate some of these things to people that might be newer to the markets, wondering what's going on. And then, discuss any sort of concerns you guys might have, go over any historical data on how the market usually performs during these situations. And, what you should do. Obviously, I'm not a financial advisor, but what I have done in the past, what I've seen in the past, and, from my experience, what usually happens during these times of market volatility, during environments in which the Fed is definitely going to be raising rates. So we'll go over all of that. I wanted to go over any questions that you guys have. And yes, as David Martinez said, hit the like button. It helps people find the stream, which I think is important. So yes, go ahead and hit that like button, please, if it takes you 2 seconds. So hit that thumbs up button. But yeah, so I wanted to go over any sort of questions that you guys might have, and any strategies, any questions on strategies that you might have. I'm going to be going over the options day trade because I get a lot of questions about this as well. So every morning we send this day trade watch list here. We sent it out this morning, trading the SPY, the triple Qs, Apple, AMC, NEO, and IWM. These are based on levels that I see. We had some fire ass trades on XOM, which is Exxon Mobil. So we had this. We did a back ratio spread on XOM. This one was up 1,000% because we received a 5-cent credit for it and was able to sell it for near 50 cents. So that was an insane trade. And then we also had an earnings trade on a strangle on UPS, which made a huge move this morning. We're up 127% on that. I closed both of those trades before the stream so I don't get shafted. But yeah, I wanted to go over any sort of questions that you guys had around strategy, around what the market conditions are, and bounce back some ideas. So this is an open forum. If you guys have any questions, feel free to just shout them out, and I'll go over them. But I'll give a brief market overview, and then I will go over your questions. So right now, the futures were slightly green. The market's open slightly green, but as we've seen during times of volatility, it's not uncommon for those those levels to break fairly easily. And even if you look at, for instance, the day trades, the levels on the day trades, they were in a very tight range. And so these day trades are really set up to be neutral every morning. If the market breaks a certain level, you buy the calls. If the market breaks breaks below a certain level, you buy the puts. But if you look at the ranges, the SPY, the triple Qs, and the IWM were trading in a very tight range. So for me, it's not surprising to see that flush after the market opened, to be honest. But NASDAQ down 1% very quickly, so declining very rapidly, to be honest. I do think that the volatility will continue in the markets simply because if you look at the VIX, so for those of you that are new to the markets and you have a question on what the VIX is, the VIX is basically just the market's fear gauge. And this right here is derived from SPX options, from S&P 500 options. So based on what institutions and traders are buying and selling, whether they're calls or puts, and the pace at which they're selling them, and the prices at which, or the pace at which they're buying them, and the prices at which they're buying them. So, how much are investors willing to pay for puts? If they're willing to pay ask or above, then that's a bearish sentiment, and could affect the VIX in a way where volatility seems to be sticking around, seems to be lingering. So as I was saying in the Discord, I am not comfortable calling this market correction environment over until we get the volatility back below 20. So most of last year, it was below 20. And, obviously we had a few times where there were spikes around political events, around market uncertainty, around Fed meetings, etc. But for the most part, the range on the VIX was very tight. We had a floor of about, 15 on the VIX. And really, for the most part, you could draw a line at 20 and see that the VIX for most of last year was trading in this range with a few strikes above. Now the VIX has popped above 30. There was a day that we got near 40, which was right before the FOMC meeting. And now we're hovering in the 25 range, and it hasn't fallen below 20 for most of 2022, right? So until the VIX gets below 20, I think that volatility is here to stay. And that will spell, basically you're going to get more days where you're going to open up green and turn red, or open up red and turn green. And it's going to seem like you're in an uphill battle. Not necessarily, the market might not continue tanking, but it's not going to be a comfortable ride up. You will get bounces off of major moving averages, and you'll get a lot more sideways action, which is fine, because if you know how to day trade, then you could play that volatility. If you're a long-term investor, however, I just want to remind you of a couple of things. One thing, and I recently just said this in the chat, if you're trying to bottom hunt, right? If you're trying to long-term invest using your day-to-day emotional swings, that is not going to bode well for your portfolio. So if you bought the major indexes, whether it's the S&P 500 or the NASDAQ, at major moving averages every single time in history, I'm literally talking about every single time, and you're buying it for the long term, you've never lost. Not once, not one time, right? This only becomes a real consideration or concern if you are likely going to retire in the next 5 years. So if you're 60 and you're trying to time the market by buying at the major moving averages and saying, oh yeah, if I, or not time the market, sorry, but trying to dollar cost average by buying at the major moving averages, thinking that you're going to be safe. If your horizon is, 2 to 5 years, you might not, the market might not bounce back in time for you to make a significant amount of money, depending on what the market is doing. However, if we're talking about long-term investing, if most of you on this are, in your 20s to 40s, if you bought at the major moving averages at any moment in history, you've never lost, not one time. So trying to bottom hunt for me is not an option, right? As I was saying with Microsoft the other day, when I see Microsoft at 274 in bear market territory at the 300-day moving average, I'm going to pick that up. I don't care if that's the bottom or not. And that's the exact same sentiment that I had in March 2020 when everyone was spelling doom and gloom. March 2020, right before stimulus, I'm like, man, these prices are too cheap on Apple, on Amazon, McDonald's, on Chipotle, on the SPY, on the triple Qs. I'm not trying to time the bottom. I like the discounts that I see, so I'm just going to buy blue chips, and will likely continue to dollar cost average if they keep falling. So in my view, when things are in bear market territory and you see blue chips that are at discounts that we haven't seen in 2 years, and people keep crying about, not being able to buy stocks at cheaper valuations, well, that is the time to buy stocks at cheaper valuations. The problem is that now your day-to-day sentiment gets in the way, and your thinking evolves into, oh man, I can't wait for the stock market to dip, to, oh, is this the bottom? I only want to buy the bottom. Is this the bottom? I'm afraid if I buy here, it will keep falling. Well, you weren't afraid buying Tesla at 1,000. You weren't afraid buying, Microsoft at 330. You weren't afraid buying Apple at 180. Why are you afraid buying Microsoft at, 274? Or why are you afraid buying Tesla at 780? You weren't afraid to pull the trigger at 1,000. So, your monkey brain, the ape part of our brain really takes over. and you have to fight that tooth and nail and remember that, hey, if I'm okay buying Tesla at 1,000, why the hell wouldn't I buy it at 780? And it's because your mind starts, your ape brain starts interjecting and saying, oh man, you're buying something that's falling. Watch out, watch out. But you have no problem buying something that's rallying, even if you're buying at the most disadvantageous price, right? So keep that in mind, that don't try to long-term invest using your day-to-day sentiment. But yeah, do I see the market going to bear market territory? No, I don't. A 10 to 20% correction, sure. A sustained correction, meaning we trade sideways for the first quarter, sure. But the conditions aren't really there yet for there to be a bear market / recession, right? In terms of job growth, GDP is going up. I actually saw a metric that really surprised me earlier about, I think it was about the debt that Americans hold, that it's the lowest in 40 years. I think I'm going to try and find that. I'm going to try and find that for you guys, but that it's the lowest debt ratio in 40 years for the average American. So yeah, there aren't really conditions for a recession. And I was listening to somebody talk about this the other day on, I can't remember what channel it was, but basically what has signaled recessions in the past is when the banks are over levered, right? When they're using too much leverage and they're no longer lending. And when lending stops, that's what kills businesses is when the banks are no longer willing to lend money. And we're just not there yet, in my view. So yeah, I'm trying to find this metric about debt. I think I might have read it here. Oh yeah. So Draho at UBS, like others interviewed for the story, blah, 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 views the risk of a recession in the next 12 months as low. He added that while inflation is at 1980s highs, consumer debt levels also are near 40-year lows. The consumer is in strong shape and can handle higher interest rates. And that is my belief as well. Again, that's not to say that the markets won't drop further. I would not be surprised if we get to a 20% correction in most of the major indices. I think we already did on the NASDAQ, hit that 20% mark, but certainly not in the Dow and certainly not in the S&P. Another thing is that if you actually bought, on average, if you bought the S&P corrections, we've had 33 corrections of 10% or more since 1950. If you bought when the S&P was, so basically you bought the dip when the S&P was minus 10%, then your median return in the next year is 15% and even higher than those who didn't buy the dip and just held on, right? So this is why I'm a huge believer in weighted dollar cost averaging. If you see the indexes at major moving averages, for me, I buy in heavier during those times. Now, you don't have to, right? You could certainly dollar cost average regularly, say that you have a paycheck every month and you say, hey, I'm going to take $250 or $500 out of my paycheck and put it into the markets. I don't care what happens, right? That's fine too. But for me, when I see the major moving averages on the indices like the triple Qs or the SPY, I go in heavier. And it's specifically because of metrics like this, where if you bought the S&P 500 every time it was down 10%, your median return for the next 12 months is 15%. And another thing to note is that corrections rarely turn into bear markets. Bear markets are very rare. So corrections rarely turn into bear markets. There has to be an economic environment that is going to lead us to a bear market. A bear market is not just something that arises because of high interest rates or because, stock market valuations are too high. There's usually an underpinning event or string of events that is going on economically as well, whether we're falsely issuing too many mortgages, coming in and appraising homes at too high of a price so that banks can make money, whether we're packaging up mortgage-backed securities, packaging up C-grade debt and as mortgage-backed securities and claiming that these securities are now rated as A. there are so many conditions that really go into a bear market, or sorry, like a recession environment, and I don't think that we're there. The one thing that I'm worried about is something that I've talked about before, which is called demand destruction. Demand destruction occurs when demand is so high, but supply is constricted, right? Supply is constricted and prices are too high. So if you look at what demand destruction means, demand destruction is a permanent downward shift on the demand curve in the direction of lower demand of a commodity such as energy, blah, 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 induced by a prolonged period of high prices or constrained supply. And this is something that I don't think enough people talk about. And we have both of those things right now, high prices and constrained supply, right? There are still ships that are docked in LA at the port of LA because, you know, one, there aren't enough workers to unload those ships. But if you tried ordering anything, even from companies like Apple, you know, you're looking at 2 to 3 month timeline for delivery. So we have constrained supply. The chip shortage definitely applies here as well, and high prices due to inflation. So this right here is something that I think could potentially lead to, you know, economic turmoil. But in terms of in terms of consumer strength, in terms of GDP, in terms of unemployment and job growth, we're just not in a situation where we've seen recessions in the past. All right, let me go over your questions because I've been talking way too much. All right, Zomox, thank you so much. Donated $38 to St. Jude's. Thank you so much for your donation. Hit the like button. Yes, true. Good morning. Is Google a good play with earnings coming out? Okay, so let's take a look at Google. And then Somox, who did a donation, has a question. You pay? Oh no, he or she was responding to somebody else. All right. What about interest rate hikes? Okay, we'll talk about interest rate hikes. We'll talk about Google. Yeah. So in terms of the interest rate hikes, I think most of it, honestly, is priced in. So if you look at this article here on Market Watch, what to expect from the markets in the next 6 weeks. It really looks like if you use the Fed Watch tool, right? The CME Group's Fed Watch tool. If you use this right here, let's pull it up. But basically, this is the fear and gauge index on what the Fed is going to do with regards to raising rates, right? So it's basically just a bet on when the Fed is going to raise rates and to what level, right? And how many interest rate raises that we'll get. But if you look at it right now, I think that all of the fear of rate hikes are priced in, meaning that the worst is being priced in, right? Whether we get 4 rate hikes, whether the Fed rate is going to surpass 1%. We're seeing now that there's a 33% chance, based on that Fed Watch tool, that the target rate is going to be 1.25 to 1.5%. So I think all of this stuff is priced in. Yes, when the rates actually are hiked, we've seen in the past that the announcement of rate hikes are worse than the rate hikes themselves, because the market is forward looking. So it's pricing in what it doesn't know, it's pricing in what it already knows. And as soon as that information is released, it's reacting according to that. So that is essentially why I don't think that the rate hikes are going to be as big of an issue as the announcement of the rate hikes, to be honest, in terms of the shock that it will cause to the markets. Let's go over Google, because someone had a question on Google. So we will definitely be playing earnings on Google in the same way that we played earnings on Exxon as well as UPS. Do I think it's a good pickup? I thought it was a really good pickup when it was finding support here near the 300-day moving average. I think that if you're a risk-averse investor, you're always better off waiting until earnings subside, right? The one thing that gives me pause about mega cap tech stocks, not really pause, but the fact that you can actually wait for earnings to be released is, this whole month, so January 2022, if you're looking at the NASDAQ, right, this right here is 2022. So it is the worst drop since the Rona crash of March 2020, the worst month drop since the Rona crash of 2020, right? This kind of selling pressure here, and I've talked about this in the past, doesn't usually just end, right? I again, whether we drop further, whether we just see some really ugly sideways trading, who knows? Nobody can tell you that, right? But this downward pressure here for a month, for a whole month, usually leads to more ugliness, whether that's, again, in the form of more drops or more sideways volatility. Who knows? So I think that on stocks like this, I do think that if you are a risk-averse investor, stocks like Google, sorry, because the question was specifically about Google. If you're a risk-averse investor, you can wait until earnings before jumping in. But I did like Google when it was near the 300-day moving average at that 2,400, 2,500 level. For sure, I don't mind dollar cost averaging. And even now, how far down is it from highs? I mean, you were able to get Google at almost 16% down from highs. We are now less than 10% down from highs. So, waiting for the bottom is going to kill you most times in the long run, and you're better off dollar cost averaging. That is my take on it. Let me get to the rest of your questions. When is your options course coming? It's already out. Check the link in the description. It's been out for a year now. Most of your day trade made profits. Yes, the day trades have been an extremely solid addition to the Discord, to be honest. And I love that folks are getting a lot of value out of it. More than anything, I love that folks are getting value out of it. Because, again, we wake up every morning neutral. We don't have a bias, right, on a day-to-day basis. You can have a long-term outlook. But every day I look at this and I'm like, I don't care what happens. If we're bullish or bearish, we have setups for either, right? So yeah, I agree, and I love that a lot of people are partaking in them. And if you guys want me to explain more of this, let me know. Siona says, "Hi Z, what's going on, Siona? What about interest rate hikes? Yeah, I answered you on this. All right, I see another 10 to 15% downside. Yeah, certainly not impossible. Certainly not impossible. I agree with you. That it is certainly possible, especially the fact that the VIX is struggling to get below 25. It really is sticking to that 25 mark, meaning that investors and institutions are hedging their bets a lot using put options on the SPX. What's the last indicator you have on the bottom here? What is that indicator? I think that is just the I was trying out an implied volatility indicator. So someone was asking me last week if there are any good IV indicators on TradingView, because I use the one that's in Thinkorswim, and I just cannot find a good parallel in TradingView. So still looking on that. If not, maybe I'll create my own. Who knows? But yeah, it's an implied volatility indicator that doesn't work really well. We know interest rates will only go up from here. That won't have an effect on high growth stocks. Yes, I already answered you on this. Hit the like button, drop the mic. Oh, drop the mic. You're probably talking about what I was talking about with people who pray for the dip and they never buy them. Job openings rose in December. Yes. Z, thank you. You're welcome, Kareem. What program software are you using to conduct this webinar with your face in front of the chart? There's a green screen behind me. This here is a green screen. And I'm using OBS. So it's a free software that you can download, OBS Studio. Hi Z, Netflix looking bullish. I mean, Netflix was one that yeah, you probably should have bought the dip on. And now people are going to wait until Netflix gets above 500, and then they're going to ask, oh, is Netflix a buy here? Netflix was finding support back at the same levels that we saw in around April 2020. This was near the Rona lows. This is insane, right? So yeah, congrats if you actually bought Netflix on the dip. But yeah, Ekman bought, I don't know how many billions of dollars worth of Netflix the other day. So yeah, now will Netflix get back up to 700 anytime soon? Probably not. I don't think the conditions are ripe for that type of hysteria. That was, hysteria lingering from the Santa rally or leading into the Santa rally last year. And especially because it talked about a pause in subscriber growth, right? Remember, the stock market is forward looking. So if Netflix is telling you that our future in the short term, we're struggling to see how we're going to add a significant amount of subscribers, then the market is going to price that in. So we might not see that 700 very soon. That 500, 480, probably more likely. So remember, just because something hit highs recently doesn't mean, we're going to automatically get back to those highs. It could be a very long time before we see those again. If you look at a stock like Ford, it was very long before Ford was able to get back into the 20s, and it was all due to their now growing EV sector, where the market is pricing in Ford's future. But Ford tanked from the $20, the 20s range that it was able to achieve back in the late 90s, early 2000s, and really has not recovered until it came out with a product lineup where now investors are pricing in that future. So remember that all the time, that the stock market is forward looking. It is not a lagging indicator, right? Can you explain the daily charts? Yes. So I will go through. Can you explain your options watch list again? Yes. Can you explain blah, blah, blah? Okay. My ZOM is up 350% and can't sell. I don't know what to tell you. This is not a, when folks say that they're struggling to sell their options, I know it's easy to think of these things like a video game where if you click a button, something should happen, but this thing is a market, right? So prices move dynamically every second. If you're struggling to sell, it's not going to sell just because you clicked sell. If the market is now telling you that this option is worth a certain price, well, you better lower your price if you want it to sell, right? You can't, if you have a car and that car is worth $20,000 in the market, and by the time you list it, that car is now worth $15,000, your car is not going to sell at $20,000, right? You're going to have to knock it back down to $15,000. By the time you list it on the market, the prices could have changed violently. And options are an even more extreme case of that example. So yeah, when you say you can't sell, there's no glitch in the platform. It's because options prices have changed since you've tried selling, and now you're going to have to accept less for it in order to execute your order, or you could be stubborn and set it at a price that you want to sell, and hopefully the market gets back to that price. So keep that in mind when trading options. I will go over now the options watch list, right? Oh, wow. XOM hit a high of 80. I ended up selling this before the live stream when it was near 79. So that play that we had, that back ratio could have been even more lucrative. So let's take a look at like IWM. Okay, this is probably a great example of the options day trade watch list. Okay, because IWM, like all other indexes this morning, was trading in a very tight range. Okay, so if we look at IWM, the day trade watch list says if it gets below 199.65, okay, maybe I should explain this first. So the way that I have it color coded, I have calls in green, puts in red. Okay, and all this means, a lot of people ask me what this means, this symbol here, these symbols here, and I'm always baffled because when I was growing up, this was buried into our heads in math class, that this symbol here means greater than, this symbol means less than. And if you're having trouble remembering which is which, look at this as like a Pac-Man type of monster, and whichever direction its mouth is open, right, that means that side is greater, that it's looking to eat the higher number. So this is greater than, this is less than, right? And so for IWM, for instance, saying if it drops below 199.65, I'm buying the 198 put. Now, a lot of newbies look at this thing and are, they might look at the price of IWM, and if just the mere fact that it's below 199.65, they're like, oh, okay, I see this. Now I'm going to buy the 198 put. No, what we're doing here is called breakout trading. Okay, so I'm looking at I'm looking at the 1 minute and the 5 minute charts, and I'm basically looking for a breakout. So I have my level set here from the options day trade watch list, and I'm looking for this to be breached, right? And the minute that it is breached, that is when I buy the 198 put, okay? And I'm buying the 198 put, and I'm looking to take profits as soon as possible. Now, if you don't know how to read a chart, your profit taking for the initial trial of this is going to look horrible, right? The first time you try this, the first 100 times that you try this is going to look horrible because you don't know when to take profits, especially when you get these volatile bounces, these volatile V-shaped bounces. However, if you know how to read a chart, so just looking at this, for instance, I would eye this level here as a potential profit-taking level because this was support the previous day that IWM was trading. And it's no secret, or sorry, it's no coincidence that IWM bounced off of the same level. So I will start to look to take profit around that range. It's good practice to really, you know, when you first start doing this, you're going to be so caught up in trying to buy and sell things quickly that you're not going to have time to calculate, oh, how much am I in profit? Okay, you know, what if I do a partial profit taking where I sell 50% of my position and keep 50%? Like that stuff, it comes with practice. And this stuff happens so fast that you're going to really rack your brain trying to do all of those mental gymnastics in real time, right? So you're better off buying and selling your whole position. And I really would not start with more than one contract while you're learning to do this, or even better yet, paper trade. But, you know, say you bought 50 of these IWM puts. Well, when it hits this level, then you might sell 50% of those and see what happens. If IWM starts bouncing, then you might sell the rest. And the reason that I do that is because I want to alleviate the feeling of missing out on profits. What do I mean by that? Well, there are times when on really you know, high momentum days where we might not get this bounce, where, you know, IWM can keep tanking and your puts are going to keep increasing in price. However, if you sold them all at 20% profit, for instance, and now IWM puts are at 100% profit, well, you're going to be kicking yourself in the ass. So in order to participate, you know, or in order to give myself a chance to participate in potentially higher profits, it is very psychological as well, I'll admit, but I'll sell half of my position or 75% of my position and let the rest ride, because I do want to see, you know, those puts, I do want to take advantage of some of those puts hitting the higher profit mark. So hopefully that makes sense. We'll take a look at another example just so that it's drilled in. But if you take a look at AMC, for instance, you know, it had a really nice pre-market level. I said, if it's above $18.30, I'm going to buy the $20 calls. If it's below $17.40, I'm going to buy the 17 puts. I actually don't even know what AMC did. I didn't have a chance to trade this before the live stream. But yes, it broke really nice below the bottom level, as you could see here, below that 1740. We went all the way down to you know, 1660. So those sort of should have actually printed really nicely. But yeah, so in that case, you would have bought the 17 puts on AMC as soon as that 1740 level is breached. And in this case, you would be looking at in terms of profit taking, you'd be looking at something like the moving averages in order to gauge when is the first time you're going to take profits. And you could see AMC on the 5-minute chart found some support at the 100-day moving average, right? So yeah, it is very the profit taking part of it is very tricky, and I advise people who are just starting to do this to really be diligent about taking profits quickly. So if you see 10, 15, 20% profit, you want to take, especially if you're still learning how to read a chart. There's no way for you to get, without knowing how to read a chart, there's no way to gauge what is a good profit taking level. So questions on that? Jonathan North, please show quads. God damn it, Jonathan. I'm sitting here trying to give you valuable lessons and you're talking about my quads. All right, let's see. Have you ever went over 3 day trades? Yeah, but if your account is above 25,000, then you don't ever have to worry about that. So yeah, maxed out on day trades. Hopefully it'll open tomorrow still up. See, this is a good lesson, back to orthodoxy, in understanding your position, right? The back ratio has terrible theta decay. Most options that are in a net buying position have terrible theta decay. Okay. So you're going to be losing on every contract. The last time I looked at it, if I remember correctly, something like $100 something every contract, just every day that passes. So if you know that you're going to be running out of day trades, you probably shouldn't have traded that specific position, right? Because the theta decay is so bad. So if the price drops and theta decay is in effect, and you're also subject to IV crush, implied volatility crush, you're really up against all odds. Hopefully you can at least sell it tomorrow. I'm praying for you that you can at least sell it tomorrow at break even. But yeah, this is a good lesson that if you are out of day trades, you probably shouldn't do certain strategies. All right. Let's see. If you, I meant day trade limits. Okay, hold on. Are there any questions on the day trade setup? Any more questions on the day trade setup? Can you post resistance and support charts for the day trades? What do you mean? Not sure what you mean. Sorry. Could you talk about Fisker? Okay, I'll talk about Fisker. I made 5K so far following your daily day trades list. That's amazing. Rhythm fingers. Thank you so much for that comment. And thank you for the feedback. Yeah, let me know, guys. If there's any questions on the options day trade, let me know. Is it too late to buy in mode stock? If you're asking, probably. I haven't even looked at it, but probably. If you're asking. All right, let's see. I'm not sure what you guys are laughing at. Did I say something funny? Marina, Venera. I don't know. I probably did. Yeah, let me know if you guys have any more questions on the day trade. Do you set up stop loss immediately? Yes. So good question, Diane. On the loss side, as I said, you have to be robotic about your stop losses, okay? So for the day trades, I don't take more than a 10 to 15% loss on any day trades, and I don't care. Like, I know how it is, right? When you're first starting out trading and you're looking at charts like this, and you see that your position is actually losing, it's very easy for you to start justifying why you'd want to keep that position open. You're like, oh, maybe this time it's different. Oh, let me just wait another minute. Let me just wait another couple seconds, hoping that, you know, that my position gets back in the green, and then it continues to go in the red. And by the time you know it, you're down 38%. And you're like, fuck, I should have closed it, right? So when it comes to day trading, you have to be robotic, emotionless about setting up stop limits for your losses, okay? I don't set up stop limits for the profit taking. Excuse me. But I do set up stop. So the minute I open the position, I go back into my position, set a stop limit for minus 10% or minus 15%, and I leave that be, and I'm monitoring in real time for profit taking. So if the position loses 10 or 15%, depending on the stock, 15% is my max. But depending on the stock and how volatile it is, I go back and forth between setting a stop limit at 10% or 15%. Okay. Then the position exits and I'm fine, and I can re-enter it. That's the thing with these levels. You can, if you get faked out once or twice, you can always re-enter it. And that's why you have to be robotic about entering stop limits. And there's no way to be successful in day trading if you're not robotic about your stop limits. You have to be emotionless. You can't leave any sort of gap for uncertainty and doubt, saying, oh, this time might be different. Let me just leave my position open. So very good question, Diane. No question, just here to support your cause. Thank you so much, Boris. Thank you. Amazing. You, Grandpa Goku, and Alton are answering all questions all day, every day at the Discord. Yes. Thank you so much for recognizing that, and shout out to everybody on the Discord for sure. What indicators do you use to day trade? Literally none. I have the moving averages open. It's all based on my levels. That's all it is, right? It's all based on support and resistance that I draw beforehand. That's really all it is. So yeah, once in a blue moon, I'll use Fibonacci or, moving average crossovers or whatnot, but I'm not really using a slew of indicators to day trade at all. It's just support and resistance. What's your setup on Thinkorswim? If you're on the Discord, hit me up. You should see it. You should actually see it in there. I have it posted. If not, email email info@thetravelingtrader.com. Young Ula, you're out here doing God's work. Thank you so much. Thank you so much, man. And shout out to you on the Discord as well. Day trade. If soy gets above 451 today, would you enter the 452 call? By soy, I think you mean SPY. Again, it's not if it's over 451. If it breaks this, see, I drew it here pre-market. So if it breaks this level, so if it breaks out of this level, but the fact that we got a morning flush, meaning that the SPY actually hit near that level and started dropping, I would be very hard pressed to think that the SPY can get above this and significantly cross above it. Is it possible? Yes. But now that, 2 hour or an hour and a half into the market, I think it's very unlikely that we get above that 451. But yes, technically, if you got above that 451, you would buy that call as soon as it breached, right? Not if the price itself is above 451, but as soon as it's breached. Okay, so that's a very important distinction there. All right. Bye. Good entry into Tesla for newbies. Holy guacamole. Why didn't you buy Tesla at 780 or 790? Again, this is my point, is that people are so happy overpaying for stocks when they could have bought it recently. Like Tesla just 2 days ago, right? Literally 2 days ago, Tesla was at 790. Why isn't that a point of buy, a point of purchase for you? And at the 300-day moving average on top of that, which in my view, again, for blue chips and indices should be a buy point regardless, right? Why are you so happy paying above 900 for it when you could have got it for under 800? So yeah, I mean, you're going to keep asking that until Tesla is back above 1200. And you're likely going to then pull the trigger, which is even crazier. But yeah. All right. Your day trading video you did a year back is like my Bible. I watch it once. Yes, thank you so much, Abhilash. And I did an update, by the way. I did an update. So if you go to the Discord and you go to the top of this, if you go to the pinned comments in the day trade watch list, I actually have a video here going over explaining. It's a 10-minute video explaining exactly how to day trade this stuff. So if you're on the Discord, just go to the top of this channel here, the options day trade watch list. If you're not on the Discord, I don't know what the hell you're doing in life. Join, click the link below. It's a great resource in my view. So yeah, that video is an update to the one you're talking about. So Jonathan North said, listen, people buy stocks high because of mimesis or mimesis. I don't know. I'm probably too old to know what that word is, but I get what you're saying. Memeness. This is what Gerard talks about. Humans don't intrinsically know what to value. This is why they are drawn to long lines. We look to others for it. Yeah, you're right. He buys high and sells low like Meat Kevin. I don't know what Meat Kevin does. I only know because of you, because of what you guys say. So apparently he sold all of his stocks, to each their own. Just click the link. How much is the Discord? Click the link in the description. You'll see it. All right. Let me see. Any more questions on the day trading? If not, let me know. How day trade if you are not from the U.S.? Most people on the Discord that are not from the U.S. actually use interactive brokers. So you can use that. What is the expiration date on the calls and puts you are buying? It's the end of the week. So they're the ones that expire the soonest. He has a toss template in the description. Yes, also it is on the Discord as well. You out here doing God's work? Yes. Okay. So any more questions? Fools, get into TTT Discord now. You won't regret it. Thank you, Bruno Valente. What's going on? Thank you so much. Does buying a call then selling the same order count as one or two trades? Yeah, buying it and then selling it the same day counts as one day trade. Yes. If you have a day trade limit. Yes. It's going to be very hard to day trade without having the pattern day trade restrictions removed, right? It is going to be very hard. All right. Boris, thank you so much for your donation. Oh, that's why you were saying earlier that. Thank you so much, Boris, for the $50 donation. Amazing. Amazing. Thank you so much for always donating and always watching. Amazing human being. Thoughts on Kraken as a brokerage? Yeah, they've been around for a long time. Yeah. I mean, they certainly improved their interface, and they're based in, I think they're based in the US. So how to set up stop loss on options for day trading? Reagan Baker asks. It depends on what platform you're using. Google how to set up stop loss on ... Thanks, TTT, for your daily options list. It has helped me build funds to invest into blue chips during the dip. Really impressive work. Appreciate you, Ryan Gabriel. Thank you so much for that. Clear Haze, I had a question. What is your question? Post it, Clear Haze. Appreciate your work, Z. Just want to ask if you have a max drawdown for day trade activities. Yeah, I just mentioned it. I have a stop limit. I never, ever take more than a 15% loss on the day trades. With your day trades, when do you think is the cutoff time in trying to enter the trades? Usually the first 3 hours provide the most opportunity, but certainly they apply all day. Is it possible for a stocks day trade watch list? Not really. I mean, not really. Spotify on high, yes. Spotify is one that I definitely missed and should have bought on the overreaction due to all of the Joe Rogan backlash, which now Spotify said they're going to add disclaimers, before any before any podcasts where vaccines are the topic of discussion. And that was enough for investors to be like, oh, cool, we're back on the bullish bandwagon, which is crazy because, those disclaimers, it's like, do you remember back when we were, I don't know, for the old folks on the chat, back when we used to buy CDs, and it used to have that little parental advisory sticker at the bottom. That's because politicians were like, oh, hip hop and explicit lyrics are ruining the minds of youngsters. We have to do something about this. So then the music association, or actually, I think it was the FCC, said, okay, fine. Every CD that has cuss words, we have to put that little parental advisory sticker on the bottom. And that was enough. And people were like, done. That's a great effort there. But we all still bought CDs that had parental advisory stickers. Kids were still listening to all that music. It didn't do anything. So, in my view, regardless of what you think about Joe Rogan, about his stance on the issues that he's talking about with regards to Rona and the jabs, regardless of what your take on it is, saying that, oh, now we're just going to put a disclaimer in the beginning of every podcast that talks about this stuff. I mean, okay, like, is that, are those bumpers really, as an adult, really going to be like, okay, thank you so much for doing that. Yes, this is going to be very helpful. No, it's just a formality, right? So long rant about how I should have taken a look more at Spotify as a stock to buy in the dip. Ohad says, when you're asking about, is it possible for a stocks day trade watch list? I don't day trade stocks. To me, day trading stocks and even to a lesser extent, Forex, it's just too much work for too little for too little incentive, right? The reason that I like options is because they're leveraged and they are relatively cheap, and you can make a large percentage gain off of your trades. With stocks, you have to put in so much money just to make an incremental amount, and it's so much effort. It's a lot of effort and a lot of capital, and to me, it just doesn't, the risk reward on not only the time that's required in order to make a decent amount of money, but also the amount of capital required. It's just too much. I would much rather day trade using options. And if anyone is going to take up day trading, I recommend that you go the options route, right? Do what you want, but I recommend that. It is much easier from a capital cost perspective. The gains are much more exponential because you're dealing in basically low cost contracts that are leveraged and can exponentially gain if the stock moves in the direction that you want. So Yeah, I would not even waste time trying to create a stocks day trade watch list and then try to day trade stocks. It's just too much time and too much capital commitment for an incremental gain, in my view. But to each their own. To each their own. All right, let's see. More questions. Naomi Birch, CDs associated with the old. Yeah. Yeah. I mean, if you were born in the 80s, you certainly know what I'm talking about. If you were born in I don't know, maybe the year 2000 or later, for sure, you don't have that experience of, being told that you have to be 18 or get your parent to buy that, Ice Cube CD that that you wanted. But certainly, yeah, those little parental advisory warnings were so useless. I thought this was America. Yeah, you and I both. Tony Torres just subscribed. Appreciate you. Oh, Rich, yeah, you were talking about free speech is dead. No, I mean, in my view, I think there's a conflation between free speech and private platforms, right? Again, if you're as old as I am, you remember in the 90s that politicians, mostly Republican politicians, but there were certainly some Democrats, like the Clintons, like C. Dolores Tucker, that were out to get the music industry for explicit lyrics, which is crazy now because, you hear songs like WAP, right? Like that Cardi B, Meg Thee Stallion song referenced in pop culture and on late night TV, on, those talk shows like Jimmy Fallon or whatever. People make jokes about them. But back in the 90s, it was a heated discussion in the mid 90s about banning music like that. And so, it's easy to say, oh, free speech is dead. But the government was actually, lawmakers were actually trying to stop rap music in the mid 90s, and to a lesser extent, metal, harsh metal music that had cuss words like Marilyn Manson. They were trying to stop that in the mid 90s, right? So this thing isn't new. But platforms like Spotify, they can say, oh, we don't want XYZ on our platform. That's not free speech, right? It's when the government is telling you that you can't say certain things. That is an infringement on your free speech. Not when a company says we choose what to have and what not to have on our platform. Now, good on Spotify that they're keeping, artists and podcasters alike and saying they can say whatever the hell they want. Yes, that's a good thing. But don't conflate free speech as a company saying we don't want this on our platform. That's not free speech. To legalize what you can and can't say, right? And in the mid 90s, look it up. I'm not making this up. This was a real campaign by politicians to try and stop artists from releasing certain types of music. And I thought that was insane. And I was a young teenager back then, but that was a real discussion. So yeah, just a little, a little bit of history for those of you that might be on the younger side, and a little bit of nuance about free speech. Dude, when are you meeting Tom Nash? What do you mean? I'm not sure what you mean. I don't have a scheduled interview or anything with him. I don't know. Why? Did he say anything? I don't know. Would you box meet Kevin? Trip Nation. Oh, I didn't see your previous question. No, I wouldn't. Like I told you last time you asked me this. I don't believe in boxing anyone that I don't think can kick my ass, right? Like if I look at you and I don't think you can kick my ass, I'm not going to box you, because then it's not a fair fight, right? There's no pleasure in boxing somebody that can't beat you. I'll only box someone who I think can kick the shit out of me, because then there's a real challenge there, right? And unless, again, I'm not very familiar with his channel, maybe he trains. I don't even know what his size and weight is, but I highly, 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 highly doubt that he boxes. And, for that reason, I'm out. But yeah, if someone actually boxes and we're in similar weight classes and I think they can kick my ass, yeah, then I'll box them for sure. But not someone who's just gonna be as useless as a punching bag. Hopefully that makes sense. All right, Rich, he trains in losing. Let me go back and read what you guys are saying. Governments hate the truth. Yep. Net accept. Thank you so much for your donation to the channel. Let's see. Any more questions? Thank you for your answer. Z triple Q's here. Yes, no worries. Fact. It's just harder controlling risk on options versus shares. That is not facts at all. No, not facts at all. Uncle Luke saved hip hop. Yes, I definitely with the ban in the USA CD. I remember that. I actually had the ban in the USA tape. That's how old I am. All right. It's also much riskier. No, it's not. Your risk mitigation really occurs before you enter the trade, right? I don't think you actually, if you're saying that, I don't think you know what you're talking about with regards to options trading. So, you know, if you bought, your risk is basically limited to the number of calls or puts you're buying. You can't ever lose more than that. So if you mitigate your risk beforehand, and as I said earlier, you could set stop limits. I never lose more than 15% on a day trade, right? So it inherently can't be more riskier if you already have the appropriate number of contracts exposed, allocated, and you're setting up stop limits, right? Jonathan North, options, best dollar per hour effort, low capital requirements. It makes sense, but it's 100% risk in some cases. No, it really isn't. Again, if you're selling options or you're creating multi-leg strategies, okay, sure. But if you're buying just calls and puts, no, it's exactly the same thing. Should I sell skills 68% down? Unfortunately, I'm not going to answer your question because I don't know how leveraged you are in skills, but I always have to bring this out every live stream, and I'm bringing it out again. I will show it to you. And when you see this pop up on the screen, which I'm about to show you in a second, you should definitely screenshot this, okay? Screenshot this, save it for all eternity. And this might not help you with your question now, but certainly will help you in the future, okay? Gains needed to recover from a loss. If you are down 70% on a stock, like you are in skills, okay, you need that to come back by 233% just to break even. Screenshot this if you don't have this already, okay? This will be the most important screenshot probably in your entire life, okay? Because this will show you what the negative effects of diamond handing or bag holding is. The negative effects are dire. They're extreme. If you're down 80%, it will require the stock to rally by 400% just to break even. That's why I was getting so much hate on my ARK video. Go and take a look at what ARK is doing now, right? Everyone thought that I was not everyone. The few people that got butthurt thought that I was bashing Cathie Woods. It's not that. It's that when Cathie Woods is coming out, all of the stocks are in deep, deep red territory. A lot of them in this range here, the 60% to 80% loss range. And you're coming out and telling your investors that you're expecting a 40% CAGR over the next 5 years, right? Compound annual growth rate over the next 5 years. You're either extremely delusional, you're on drugs, or you are a class A bullshitter, right? Neither of those things are good. So that was my problem with it. It wasn't my problem with Cathie Wood. It wasn't my problem, with stock picks, although I do have if you watch that video, you'll know that I do have a huge problem with her distribution. It's not the stock picks themselves, but how much of each stock she's invested in. Stocks like Zoom and TDOC and Peloton and Robinhood, just these insanely shitty valued companies that really are past their prime because the corona conditions are not what they are anymore. And yet you're investing in these stocks as if the pandemic environment, as if people aren't itching to get out or aren't itching to, go work out in a gym or meet in person or do business travel. Like that stuff is going to come back. Nobody wants to stay isolated in their house, yet your portfolio is really based on, it really mimics what should have been the case in say March 2020. But yeah, anyway, my point is when you're talking about skills being down 70% should you sell? This is why you should not bag hold, right? This, in my view, is why you should not bag hold. Because how many of your stocks that are down 60 to 80% are actually going to make these moves here? I'll give you a hint. Very few of them are going to do that. One or two of them might. And that was my other problem with Kathy, is that so many of her stocks need to come back, and they're all in this range, and they need to do 150 to 400% growth just to break even. And you're telling motherfuckers that you're going to, please expect a 40% CAGR on ARK for the next 5 years. Like, come on, man, get the F out of here. That to me was, that was like the last string when it came to ARK and their funds, in my view. So, if she came out and said, you know what, yes, I made a mistake, probably shouldn't have gone in heavy. We're going to reposition things so that we can get our compound annual growth rate in a better position, I would respect that more, right? But coming out and saying, yes, most of our stocks are in this down 60 to 80% range. But guess what, guys? Good news. We're still going to beat the market at a rate of 40% compound annual growth rate over the next 5 years. That just doesn't make sense to me. And hopefully for those of you that are invested in ARK, I hope I'm wrong, because I don't want to see any of you guys lose. But yeah, so should you sell skills? It depends on how much skills you have. But that's why those stocks should be a very small percentage of your portfolio, right? Most of your stocks should be blue chips. And not enough of these YouTubers talk about this. It's crazy to me that there isn't a focus on quality. It's just, oh, this is going to 10x. Oh, this is going to 20x. Oh, this is going to 80x. There is no, from what I've seen and from the videos that people send me, there is no concentration on, okay, how much of your portfolio is actually in blue chip stocks and how much of your portfolio is in high beta risky stocks, right? If somebody that you're following doesn't talk about that, well, I mean, I don't want to tell you who to follow, but yeah. All right, let me go back to your questions. Shafiq, the irony is that parental advisory probably helped with higher record sales. Yes. When I saw that sticker, I knew it was going to be a good CD. For sure. Do you find ETFs boring as a skilled trader? No, I think ETFs are a great way to long-term invest. And ETFs are a great way to day trade. I mean, most of this stuff here, not most, but every day we have, let me go to a recent one. Sorry. Just so that I'm speaking out of recency, but the SPY is an ETF, the triple Qs are an ETF, the IWM is an ETF. So yeah, no, I don't find them boring at all. Think about the Howard Stern show and how he battled the FCC for years. Yes, this is not a new thing, right? It's only, millennials and Gen Zers who are now just starting to get engaged in political conversations. They're the ones that are saying, oh, free speech is dead. You guys hate free speech. We grew up in times when the government was trying to censor, media personalities like Howard Stern and rappers like Tupac. Yes, they started that campaign against Tupac. It was specifically targeted against Tupac. That's why in that lyric he said, "See Dolores Tucker, you're a motherfucker," right? See Dolores Tucker was she a congressperson? Anyway, she was involved in politics somehow, but she had a campaign specifically targeting Tupac. Bob Dole, if you guys remember, Bob Dole was also another politician that was rallying against banning rap as a genre. So get the fuck out of here with your free speech is dead. Like, we grew up at a time when the music we were listening to, the government was trying to enforce stopping that, right? Not platforms. If Tower Records came out or Virgin Records came out and said, oh, you know what? We're actually not going to sell any CDs that have cuss words in them. I wouldn't like it, but fine. Whatever. That's your business, right? You can run your business the way you like. If the government is like, you cannot listen to Tupac, I mean, come on, fam. Like, we grew up in that time. You guys don't have to deal with that, thankfully, right? Bloodling. Thank you, TTT, about educating peeps about free speech. Yeah, I'm just talking about, our experiences. Two Live Crew, exactly. Skills bingo highly on. Yeah, I talked about that, Adnan. I'm sorry that you have six-figure losses in those, but it all goes back to this and the fact that not enough people on YouTube talk about this dynamic here. And I think that if this was known beforehand, like if this was printed and pasted on your wall, you know, a lot of people wouldn't be in that position. The best thing you can do now, you're not going to be able to recover those losses magically, right? The best thing you could do now is just put one foot in front of the other and, you know, try to tighten up your investment strategy. So please box Meet Kevin. I'm telling you, Rich, I cannot, I, in good conscience, cannot box somebody that I know cannot beat my ass. Okay. So no. All right. Let's see. I missed a lot. All right. Let's see. Day trade. Do you buy, sell, market? No. Now certain things that have very, very thin bid ask spreads. Yes, that's fine. But certain stocks are not going to have, like the SPY and the QQQ will almost always have thin bid ask spreads. And that is why I pick certain options too. These are not random. These are options that have a lot of volume because the bid ask spread is thin. If you look and the bid ask spread is like within 2 or 3 cents, sure, you can use market because it's a quicker fill. Otherwise, you definitely want to use limit orders. And in Thinkorswim, you can go to active trader and you can actually, you know, use this module here to set your limit order. So like if I click this, you know, it's going to set a limit buy at this price here and we'll just hang until it is filled. Otherwise, you could use buy or sell market if the bid ask spread is very narrow within a few pennies or so. All right. He's got paper hands. He'll cut you up, bro. Norwati Ismail. Any link to options trading training, please? Yes, check the link in the description. You will see the course there. Tom Brady is retired and the freaking Bengals are in the SU? Or did you mean SP? You look amazing, Z, and you're not old. Thank you so much, Tanya. Thank you so much. I definitely don't feel old, but you know, if you look at my license, certainly compared to a lot of folks on here, you will think I'm old. Shh, don't tell your age. The youngins don't know nothing about the cassette tape playbacks. Yes, of course. D. Snyder saved music. Meet Kevin is probably in rehab. What is your guys' obsession with Meet Kevin? All right. LSD is a hell of a drug. I never took it, but I'll take your word for it. I tried explaining the percentage from losses and returning to original price down 50%. You have to move up 100%. Yes, exactly. And it gets even worse once you cross that, because if you're down 70%, you now your stock has to gain 233% just to break even. Is nndm a good buy? Depends on what you mean by good buy, Rossi, and depends on your distribution, right? Is it a good buy if it's less than 0.5% of your portfolio? Sure. Is it a good buy if it's 50% of your portfolio? Probably not. Probably not. Let us take a look at what the markets are doing. Yeah, again, see the volatility, what I was talking about just when I started the stream, the NASDAQ was down 1%. Now it is up 0.06%. And this is all due to the volatility, right? Tesla making a nice comeback here after that story that supposedly, you know, there was a recall on 56,000 of their cars because it wouldn't stop correctly at a stop sign. It was doing like a rolling stop. But, you know, the headline was that the car was recalled. However, it was just a hot fix, meaning they fixed it over the air with a software update. So Tesla was, you know, trading at like 905 earlier, and now it is back up to 941. We have a nice position on Tesla, by the way, both in the form of an iron condor that's up around 70%, 65-70% now. And we also sold a bunch of cash secured puts when Tesla did that drop to the 800. So, and again, if you want access to all these trades, link is in the description. Everything I talk about here, we sent out, and people on the chat can vouch for that. So what was I looking at here? Oh yeah, the VIX. As I said, as long as the VIX is, you know, still hovering in that 25 range, I think the volatility will still stay in the market. We need it below 20 in order for me to feel comfortable about at least the picture of volatility. All right. Okay. Looked at Meet Kevin channel. Do chat. He has a fedora on and multiple video thumbnails. I'd rather take Kramer Matt. What is your guys' obsession with Meet Kevin? For one, I guess he's a lot bigger than I thought in terms of like his channel's a lot bigger than I thought. Just bought the dip in ARK. Yikes. I mean, if you just bought ARK now for the first time, you're probably okay, right? But if you bought ARK, if you're one of the folks who bought ARK in the 150s, 140s, I don't know that stock makes that much of a comeback with the way that the portfolio is set up right now. Remember, ARK isn't a static stock. It's a managed fund, and they can move things around as they like. So if Kathy and her team make the right moves, yes, I'll be singing a different tune, guys. I'm fair, right? I don't just, I don't dig my heels into any stock or any fund or any personality or CEO, right? That's how you get killed in your portfolio. If your whole mantra is Palantir is $1 trillion company, Palantir is the greatest company ever. All right, Palantir is $25. You're still saying that. It's $20. You're still saying that. It's now $12. You're still saying that. And you're not really objectively looking at the fundamentals and the technicals. I just don't see how people trade with their emotions, or they invest with their emotions. So with that said, yes, I was critical of ARK. ARK, since I made that video, dropped from, I don't know, what was it, $100 all the way down to in the 60s. If Kathy now is managing the portfolio differently and in a way that I agree with, I'm going to give her props for that. And, yes, I can change my tune. With new information comes new opinions, and you're allowed to change your mind. But yeah, thanks for a video you did early last year talking about the benefits of SQQ as a hedge. Yes, the ARK is singing wrong boat to get on. I made a joke on the Discord that ARK should be, the fun ARK should be renamed to Titanic. Thank you for keeping things real, Sia. Yes, no problem. That's what I'm here to do. Naomi Birch, yes. Back to you. Great stream. Might have to join. Up to you, Marcelo, or you could just join the streams. I'm here, at least once or twice a week. Do you think AMD is going to get near 180 again the end of the year? Really depends on Xilinx. It depends on the Xilinx merger, to be honest. Adnan, I already talked about your 6-figure losses in skills being on Hyliion. Rewind the tape. Now Stern is on the bandwagon with them. No, I think Stern said that he doesn't agree with silencing Joe Rogan. Yeah, he may be on the bandwagon. I wouldn't even call it a bandwagon, but he may have a different stance than Joe Rogan on the issue of jabs and the Rona and the pandemic. But he certainly came out in defense of Joe Rogan. I thought Parental Advisory was a music label. That's so funny. Yeah, because all of the CDs I had that Parental Advisory, so I could see why you would say that. I wish you had told us about weighing your portfolio in December, not at the end of January. All right, should I even dignify this with a response, guys? Zifty Z says, I wish you told us about it in December, not at the end of January. You think at the end of January, which was literally last week, you think that's the first time I talked about portfolio distribution? Okay, how about this? How about we go back and look at all of my posts going all the way back to June of last year, even earlier. How far back do you want to go? How far back do you want to go? And you will see the portfolio distribution. I'm just trying to find a screenshot of a portfolio. Here's one. This is from August. Apple, Google, Microsoft, Walmart, Amazon, right? Taking up half of the pie. And that's one of the mods, Grandpa Goku's portfolio. Yeah, I mean, I've been beating on the drum about this for forever. So I'm not sure what you mean end of January. And if you're a fan of this channel, you would know that we only talk about high quality stocks. Not only talk about high quality stocks. We talk about making sure most of your portfolio is positioned in high quality stocks and not in BS stocks. I'm not saying you shouldn't have bought Skills or Fubo. I certainly have done that. And I certainly still have some high beta stocks in my portfolio, but they're a very tiny percentage compared to the bigwigs, right? I mean, come on, fam. Like, I'm going to give you the benefit of the doubt, Zifty, and say that you just joined last week. Because if you've been a fan of this channel for months, you wouldn't make such a, I don't want to say stupid, but such a vapid statement. All right. NWA. Yeah. Straight. The struggle was real. Yes. Joe Rogan has the right to talk about whatever he wants, but that doesn't mean Spotify needs to keep him. Yeah, certainly. That's their right. Their right? Like their free speech rights as well. Spotify's. As a company, you have the right to run your company the way you want. So while I may feel a certain type of way about companies, I certainly don't think it's illegal, or I don't even think it's unethical. I think it's unethical and illegal for the government to tell you you can't talk about this, which is what we were facing with music in the 90s, right? So imagine the government coming out and saying Joe Rogan, needs to be silenced. That there would be an outrage there, right? And you'd be right to be outraged. And we experienced that. People who are as old as me, who grew up in the 90s. What options are you playing today, Alvin? Check the options day trade watch list. Send it every morning. You would know if you saw it. And also, yes, let's talk about earnings real quick. So as I said, we played, we had that first 1,000% trade of the year on ExxonMobil. We did a back ratio on ExxonMobil, and we had 130% on the UPS strangle. So we played both of those because they reported before market open today. After close, oh, you know what? I better get off this stream and send out some trade alerts. After close, we have AMD, PayPal, Starbucks, GM, and Google, and MicroStrategy, which doesn't have usually the options volume isn't great, but I'll still look at it because it's inextricably tied to Bitcoin. We have AMD, PayPal, Google, GM, Starbucks. Wow. All right. I better get off the stream and send out some trade alerts. What do you guys think? You guys want trade alerts for this stuff? But yeah, so far 2022 has been a great year for day trading and a great year for earnings so far. So, a great way, an efficient way, I guess, or a good way to hedge against some of the volatility that we're seeing is learning how to trade options, learning how to day trade. I think in times like this, it will help you greatly because you're just playing the volatility and you don't really care what the market does one way or another, all while continuing to build up a long-term portfolio while still engaging in trades every day, taking advantage of the volatility. All right. What do you think about SFT? Depends on what you mean. Don't be disrespectful, TTT. He always talks about good portfolio distribution. Oh, yeah. Yes, you're right. Thank you. Let me see. Can you explain how to set up a chart on TradingView? How much time set when looking? It depends on what you're looking to set up your chart as on TradingView. Maybe ask a more specific question, Sal. Or if you're part of the Discord, ask me specific questions there. I don't want to go over, every single indicator that I have here. But it really depends on what you're trying to read, honestly. But I would say at a minimum, have the moving averages up, maybe the RSI and the MACD. Some of this other stuff might be a bit complicated. So if you're just starting out, you're better off having those basics, the moving averages, RSI, MACD, and then learn how to read patterns. That is the most underrated thing that you will not get out of any indicator. You actually have to put in the work to do that yourself. So yeah. Yoda never needs to explain himself. Pay attention. No, I'm happy explaining myself, brother. I'm happy explaining myself. It's just, saying that I just started talking about portfolio distribution at the end of January. That's insane. Z the Traveling Trader versus Meet Kevin. Z talks about strategy, non-BS stuff. Meet Kevin just talks like a used car dealer. You guys are really obsessed with this guy, man. You guys are really obsessed with this guy. I don't know. Maybe I need to get him on a live stream and interview him and see what questions you guys want me to ask. TTT talked about his portfolio since early 2020 when I found him with like 10K subs only. Yes. Zomox or Xomox. Showmox. Sorry if I'm mispronouncing your name. Exactly. I like you because you don't say I'm feeling good about the stock. Yes, exactly. Mbappe going from PSG to Real Madrid for free. I honestly think PSG, may have been, I don't know, may have been saved in that deal. Was it a loan? I didn't look at the details. Was he loaned to Real Madrid or was it a trade? I'm not sure, but PSG may be saved. I think that Mbappe had he hit some astronomical heights in the World Cup, right? But then from there, it was just like a steady decline since 2018? 2020. Yeah, since 2018. It was just a steady decline since then. So honestly, PSG may have been saved there. Me, Kevin, and Financial Education just pumped stocks in my opinion. Both were pushing for trash like Corsair and Tattooed Chef. I mean, I'm not going to talk about their intentions, right? Like everyone makes bad stock picks. I have a problem with people focusing on distribution more so. So if someone says Tattooed Chef is 50% of my portfolio, or Palantir is 100% of my portfolio, or whatever, that's where I'm like, what finance school did you guys go to, right? That even someone like ARK, who engages in high beta stocks, says we don't put more than 10% in a single position. And even when they're high conviction stocks like Tesla, well, I guess all their stocks are high conviction, but when they're, the stocks that are weighted the most and that are actually doing the best for their portfolio, like Tesla, when that gets over 10%, they start trimming, right? So my problems with the portfolio distribution, I'm not going to speak to somebody's intent and saying that they're trying to pump stocks or deceive their audience. I would never say that because I have no proof of that. And honestly, when it comes to crypto, yes, that is a huge deal because even I've received tons of emails asking me to pump coins, right? And paying me insane amounts of money for it, by the way. We're talking about tens of thousands. I'm sure the big channels get hundreds of thousands of dollars for this, okay? But when it comes to stocks, there are very strict rules against this. Like Palantir, a lot of people were telling me, oh, I think this person is paid by Palantir to pump stocks. No, that is very illegal, right? Companies that are worth hundreds of millions of dollars are not going to jeopardize, litigation and jail time for paying YouTubers for a few thousand views. That's not going to happen. These YouTubers who talk about stocks, they're not paid. Don't for once think that they're paid by the companies. That's highly illegal. Nobody would do that, right? No registered company on the stock market would do that. However, I do think that they are misguided, but it doesn't mean that they're nefarious, if that makes sense. So I wouldn't cast any aspersions on these people's intent, right? I just think that if you're saying, oh, I dumped, $1 million into Tattooed Chef, you can question that decision, but it doesn't mean that, financial education is trying to pump up the stock and saying, hey guys, everyone pump this, jump on this so that I can make money. I wouldn't say that. If you guys have proof of, otherwise, then yeah, feel free to say it. All right. Yes. Trade alerts. Randy Gomez, not sure what you're talking about. Get off, come back home. Oh, yeah. Because I was saying, yes, I'm going to definitely be looking at AMD, PayPal, Google, GM, Starbucks. Might have a play on every single one of those. So if you're part of the Discord, look that up. Tomorrow, after the close, we have Facebook, Qualcomm, Spotify, T-Mobile. Waste Management actually is stock that I'm looking at for the long term. Always like dollar cost averaging in that. And then Thursday after close, we round off the highlights with Amazon, Ford, Snap, and what else looks good here? Maybe Pinterest. ATVI had that insane comeback since Microsoft announced that they were going to buy them. So yeah, it's going to be a busy week for sure. All right, let's see. All right. You are so entertaining. I appreciate you thinking that. Kevin is a super fraud. He got exposed. Again, I wouldn't cast any sort of claims like that on someone's intent about being a fraud or deceiving people. If you have good evidence, fine, but I wouldn't say that. Frick says, I love both TTT and me, Kevin. Amazing. That's awesome. Spread the positivity. Can you give 2 or 3 blue chips we should be looking at? Well, Microsoft at 274 was definitely a no-brainer. And as I said, I think Amazon here, certainly Tesla below 800. If you're talking about Tesla over and over and over again and you weren't willing to buy it below 800, I don't know what you're doing. And then Amazon here, I was looking for it to hold support at this level that goes all the way back to July 2020, right after the pandemic. So it was like around the 2,800 level. So, again, you might want to wait until earnings come out because they completely whiffed on their last earnings, missed heavily. And their stock price went from 3,800 all the way down to 2,700. So, I think dollar cost averaging in Amazon is also lucrative. But if you are risk averse, you will want to wait until earnings. The only problem is if last earnings were super shit and they tanked, and these earnings, they blow, they blow out positively, then you could see a huge rally, and we may never see Amazon back at the 2,700 level for a very long time. So, I do like it at the support level here. If you're really risk averse, you will want to wait until earnings, but the choice is yours. Tons of fake accounts on Instagram. You don't happen to have a special business opportunity for me? No, probably not me. Mbappe looks like a Ninja Turtle. Yeah, well, Dan Linson, that may be the case, but I bet you he can, pretty much hook up with whoever he wants to after every single game. So there's also that. How is Marvell Tech? It has been doing so well. Nobody. Yes, I like Marvell. I like Marvell a lot. I think that it had wrong ticker. I think that at the 200-day moving average, it is definitely a pickup for sure. And it also did beat out last earnings as well. And it pays a dividend, right? So yeah, I like Marvell here for a dollar cost average, and I think it's a decently priced. Priced semiconductor stock in the 70s range. A lot of them are pretty expensive. Marvell, pretty decently priced. Again, go into the valuations and look into it. But yeah, I like it at the 200-day moving average. What's your opinion about my beautiful island, Sicily? You know what? I was just talking to somebody about Sicily yesterday and about going back to Sicily. I visited Sicily, when was it? In November. Absolutely loved it. Immediately became my favorite place in Italy. It's so majestic. I will definitely be going back to Sicily, Rossi. So if you're there, let me know. I don't imagine that a ton of people are from Sicily enough to do a meetup, but sure, if you're there, would love to meet up with you guys. I totally agree with what Z said. Very helpful. Appreciate you, Ann Chow or Ann Chu. Sorry for mispronouncing your name. All right, let's see. He is traded. You have consistently said distribute portfolio appropriately. Yes, go back to any video talking about long-term investing and you will see that. You're right. Do you trade futures and Forex? Futures, yes. Definitely not Forex. What do you think about Nancy Pelosi and her trades? Should that even be legal? Check this out. U.S. lawmakers traded an estimated $355 million of stock last year. These were the biggest buyers and sellers. Some of the people on this list really surprised me. Like Ro Khanna, this guy is supposed to, he touts progressive ideals. Is supposed to be on the, the Bernie Sanders, Elizabeth Warren side of the political spectrum. This dude is a boss, okay? $53 million traded last year. I didn't even know he had this much money. He has the highest, no, not the highest, sorry. Kevin Hearn had the highest buy and sell ratio of any politician. But this is insane, right? I was also the same person that I was talking to Sicily about yesterday, or talking about Sicily with yesterday. We were talking about this topic as well, about insider trading. Now, I have no problem with politicians having blind trusts or something of that matter, where a financial manager is actually trading for them and not taking their input into account. Meaning, obviously these people are making trades. A lot of them are making trades right before they actually vote or know that certain measures are coming down the pike. That's insane, right? Like if you're about to vote on an EV bill,
or if you're about to vote on something related to pharmaceuticals and drug prices, or if you're about to shut the government down, shut the economy down because of the pandemic. These are things that you know about beforehand, and they've made trades based off of those things. Those people should be in fucking jail. They should be in jail. They should be handcuffed on the spot. They should be in jail. Now, if I was a politician and I'm like, look, I'm leaving my shit in a blind trust. I have no idea what the finance manager's making. I'm not making any calls to him or her about my portfolio. I'm entrusting him or her with making sound investment decisions for me based on their track record that I've examined beforehand. Fine. I'm okay with that. I'm totally okay with that, right? No input from me or any other politician whatsoever, right? I'm okay with that. But, you know, right before I get on the Senate floor and I'm about to vote on a bill regarding EVs and, you know, making the U.S. compliant with clean energy by 2035 or whatever. I mean, and then you put in your trades right before that vote or right before that bill is passed. Yeah, you should be in fucking jail, in my opinion, 100%. So that's my take on it. Not surprising. Excuse me. IWM is good for the long term. Sure. I mean, I guess I just wouldn't weight small caps as heavily as the large caps, if that makes sense. Any take on psychedelic medicine stocks? I mean, look, let's get across the line with marijuana first. All right. Then we'll talk about psychedelics. All right. Let's see. I'm going to take a couple of more questions and then we'll get off the stream because I need to trade AMD, PayPal, Alphabet, GM, Starbucks, Facebook, Qualcomm, Spotify, Amazon, Ford. So a lot of trade alerts coming your way. Look out for those in the Discord. Did you say Sicily in Italy? Where do you think it is? Yes, I know it's an island off the coast of Italy, all right? And I know that Sicilians, a lot of them consider themselves Sicilians first and not Italians. But what country do you think Sicily's in then? I will come with you. Guarea says, sure, the more the merrier. Any reason you do not trade Forex? Terry S. Rewind the tape. I talked about it. It's just too much effort for incremental gain, in my view. Too much effort, too much capital commitment. I'd much rather trade options. All right. Any other questions? PayPal after earnings. I'm going to be trading PayPal earnings. He needs a parental advisory on his videos. Sometimes, yeah, when the conversation gets emotional and when I'm passionate about some of the things you guys ask me, for sure. All right. Yeah, that is it. Let us wrap it up. So we've been going for how long? Wow, hour and a half already. All right. I'm going to be ending the stream here. Excuse me. I'm going to be ending the stream here. Go to the trade alerts or go to the Discord if you want access to those trade alerts. I'm about to send out earnings trades on these things throughout the day. And thank you guys for joining the stream. For those of you that donated to St. Jude's, always, 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 thank you. Much appreciated. I appreciate you guys just even watching the streams. I appreciate it even more when you guys spend your hard-earned money, whatever that amount is, on donating to St. Jude. So I appreciate you guys immensely. Yeah. Until next time, stay safe out there, traders.